welcome back to my channel. In this today's video, we are going to discuss about most significant financial stories hit our Indian stock market. That is Jane Street, which we recently noticed a very big scam in our Indian stock market. So, what actually the manipulation in our stock market and what it means like investor like us. Let's go in detail and discuss. So let's go with the introduction part. So in early 2025, the Indian stock market was involved with the Jane Street with a manipulation of around for 45,000 crores. So this is a Jane Street is a major international trading firm. So SEBI recently SEBI is an Indian regulator, they have accused them for manipulating the Bank Nifty index. So it is not only in India, it is like these investors are like nationwide. So Jane Street is a foreign investor. So let us discuss more about what is actually the Jane Street is about. So we will have some clear idea what is this Jane Street and what is this company does and where it is located. So here, so about Jane Street. So what exactly Jane Street is? So Jane Street is a company, is a trading firm which is founded in 2000 in New York. Jane Street is not only the global leader in quantitative trading. This means they have strong team of mathematics and algorithms and massive computer power which takes quick decisions when they go for any kind of tradings. So with having around 3000 plus employees, uh, they have all the well expert traders, technologists and mathematicians. So they have not only offices in New York, they also have offices in London, Hong Kong and Amsterdam. Despite of having the team size and influence, James Street is very famous for keeping their profile very low and they are not going to share any of the trading strategies in the market. Now, how Jane Street access the Indian stock market? So you might be wondering how they have Jane Street. As you said, Jane Street is a foreign company. How did they came into Indian stock market, right? So here they have an officially registered as a foreign investor, which we call it as an FPI. Jane Street operates in India through local entities and partnerships. So whenever the companies who trade in Indian stock market, if he is in outside the India, they belongs to this foreign portfolio investor category. So they have to tie up with any of the Indian partner. As of now, we have two partnership in Indian. We have noticed one, we have an idea, that is Novama Wealth Management, and another one they have not disclosed the company name in the case. So this legal setup allows them to trade in Indian stock market and derivatives. Using both the techniques like infrastructure and local partners, they can directly access the Indian exchanges. So that's how these all things hasn't happened. As of now, we only have one company, as you can see on the screen, that is Novama Wealth Management, and we don't know the other company since they have not disclosed the company name. So they use this advanced trading setups which can take fully automated trading using some algo trades. Okay, so the manipulation, we will also see what actually happened in the manipulation part. So let's break down some manipulation, how it has actually happened in the market. So let us assume that in the morning Jane Street would be, I mean, most of the time we notice this all these things has happened in the Bank Nifty, right? So let us get into deep now. So Jane Street would aggressively purchase large amount of banking stocks which are indirectly affecting the Bank Nifty index. So buying this activity which directly push the like for an instance, let me give you some example here. So when we are talking about Bank Nifty index, so in Bank Nifty we will be having 5 to 6 or 7 bank stocks, right? So for an instance, let us take HDFC Bank as an example here. So these people will be buying the HDFC Bank with a large amount of when the market is opening, they used to put lot of money in the in the HDFC Bank. Not only at one instance, they will keep the disclosed quantity and keep on buying stocks. So this buying activity pushes the prices and the entire index as well. So other what happens to the retail investors and like you and me, we will see the price is rising, and maybe after some time, maybe like if Jane Street is doing this activity at 9:30, we might have noticed at 10:30. As a retail investors, we will come to know like something is happening in the background, so let us also participate in this race. So then that's how when investors saw the rise and join in the sessions, so sending the prices much more higher. But here comes the twist. So Jane Street also held huge option positions, which bets on volatility at the afternoon sessions. So what it actually means, like for an instance, let us take the HDFC example here. So morning at 9:30, this Jane Street will be buying the HDFC Bank. I'm just taking one example. Not only HDFC Bank, they keep on adding all their positions in all the major banks, which is directly related to the Bank Nifty index. So if at 9:30, if Jane Street is buying so much of large positions in HDFC Bank, they're putting not only 1,000 crores or 100 crores. They are building their positions with a very big amount. So slowly they are not disclosing the quantity, and they're building a long positions in all the banking sectors. So directly or indirectly, automatically our index also will follow the demand and supply zones, where automatically our index positions also will increase. So here we need to understand one thing: they are not making so much profits in stock purchasing, like when they're doing some purchase on HDFC Bank or Canara Bank or some other banks. Their majorly profits are sitting in options. So how they are going to benefit from there, that we will going to discuss now. So for an instance, in the morning 9:30, if they are buying so much of HDFC banks, so at the evening, what they are doing at the end of the day, they are closing all their positions in the same bank. So morning they are buying and evening they are selling the stocks. So here now let's see the activity in options. So when at the same time, when they're building long positions in HDFC Bank, what they're doing in the morning, in the same thing, in the same activity, they're also buying call options in HDFC Bank. They know the price will rise. So what they are doing, they are putting a long positions in Nifty and HDFC Bank, and also Bank Nifty. So indirectly they know the Bank Nifty index will move above the price what actually it is trading. So they will take all the long positions in Bank Nifty, in which they know the starting point and ending point, because these people are running the market as of now, because they have so much of huge funds which can really give us some supply and demand crash. So that's how we can see some big rally in the market, where these people, the Jane Street at 9:30, they might be taking the stock options at 10 rupees, and when the Bank Nifty goes all the way up, they are going to sell it at 100 rupees. So they have very good profits in options, and not only in mornings, they are also doing lot of trading on the evening sessions also, because they know they are going to square off their positions. Again, they are buying the put options for Bank Nifty, and they are buying the put options in the maybe around 1 or 2 o'clock, and then they are closing their positions by 3:30. So that's how the entire things is happening. So all the major profits are coming from options, Bank Nifty options, and a few stock options as well. But very small amount of profits they have noticed in, or I mean noticed in the stocks which are in the Bank Nifty index. I hope this explanation give you some clarity. Just to give you a conclude here. So as we know, the Bank Nifty index has some limited stocks. So their idea is to buy large amount of stocks, and due to the supply and demand, automatically if the stocks which are related to Bank Nifty stocks, if those stocks are increasing, automatically this Bank Nifty will increase. So they put large portions of money into these option contracts, and they got very huge profits in option chain. That's how they have done it in our Indian stock market. Now let's break down this profit breakdown. So from January 2023 to March 25, the Jane Street has reportedly maintained about 36,500 crores in Indian stock market. This is the biggest over 43,000 crores which came from option trading. So you can see the large amount of option profits they have came up from options, not from the stocks. They also have few losses in the stocks, which I told you, the buying of India HDFC Bank and selling at the evening. They do have few losses, but not that great. When it comes to option profit, they have majority of the profits are into these options. Though we didn't they didn't have losses of about 7,700 crores in stocks and futures, but overall if you see, the gain was very huge, and SEBI instantly reacted and freezed the profit about 4,844 crores. So you don't mean to say like I mean, as of now SEBI has only freezed around 48,444 crores. This is not finalized yet, so the case is in still in action, so we might see few further cases. Like, so what actually SEBI has taken here, so based on this US court case leak, we came up to know like this has been the manipulation has been happened. So the investigation began after some suspicious activity happened in the US court case. So SEBI quickly followed these approaches, and they have taken a large portion of this profits has been occurred in last 2 years. So what actually they have done is like, they also have restricted Jane Street ability to trade in India, banning them from option trading, and also pausing them to do regular stock trading until further questions are answered. So there are some serious restrictions in place as of now. So the very good news is now they know they don't have any option to do any trading in options and even in the cash market. But once they have some questions, I mean, answered from the questions, whatever the questions asked from the SEBI, if they're going to answer it, I think further relief can be happen to this Jane Street. What is the current status and what is going to be next? So right now the investigation is still going. The Jane Street remains closed under watch. So as of now, when you recently saw, even SEBI is coming up with the new policies in our Indian stock market. So most of the time these big investors always do this disclosed quantity in their trading. So now, even though you are putting a limit orders in your market, now in maybe in coming 1 or 2 months, I mean SEBI closely monitor all these limit orders who are frequently coming up with the same order quantity. They will be under watch, so that the manipulation come little bit less. So manipulation can create so much of volatility in the market, and it can directly risk to the retail investors. So the impact could reshape how the global quant funds and the foreign players operate in the India moving forward. Now, what is the conclusion and call to action? So the Jane Street is a high frequency, high impact trading, leading to huge profits. I mean, the SEBI already have taken some huge frozen their accounts, like if, I mean, their profits, and we are not 100% sure this is the stop for their Jane Street profits. No, even the case is still ongoing in the court. They can expect more penalties if the investigation continues. So the case is still unfold, and we could see some even stricter rules for the foreign investors as well. So what do you think? Are the penalties are enough, or should SEBI hit harder? Let me know in the comments, and if you want more updates on the big market stories, don't forget to like the video, subscribe, and turn on the notifications. Thanks for watching this video. Stocks of our India. Have a nice day.